Here with us on Trading Hour, and as promised, let's get that conversation going with Jyotivardhan Jaipuria of Valentis Advisors. Jyoti, great to have you on the show as always. So market's getting into a bit of a funk. I think this whole rise in yields and the rise in the dollar, we managed to ignore it for so long, but now it's beginning to stall what was otherwise a breathtaking rally. What do you make of things and the last 3-4 weeks that we've spent consolidating?
Yeah, so Surabhi, if you remember, for the last few months, we've been saying that the market is expensive and we've been expecting a time and a price correction. We got it in the Nifty because if you see the Nifty or, the large caps for the last, 10 to 12 weeks, they've been practically flat. But even now, if you see the small cap and the mid cap, they're continuing to do very well and they're not really correcting. So I hope, we start seeing some correction, some, consolidation in the small and mid cap also because, the rally that we've seen now, valuations are no longer cheap. The global environment is not looking good. So though India looks good, the global environment is not great. And within that, India will also struggle a bit in terms of market because we are relatively very, very expensive compared to the world.
Jyoti, thanks for joining us. This is Pavithra. So, the question then is that how do you position yourself in this market? Are there pockets within the mid and small cap where you still feel like it's okay to, get in even at these levels, or would you avoid that entire space for now?
Yeah, so Pavithra, the growth is still very strong in India. So that's the positive, that we are still seeing strong growth in India. And a lot of these mid-cap and small-cap companies, when the economic environment is strong, the earnings growth tends to be very, very strong. So we'll still make money in these companies because, we'll get the growth coming. But just now, the margin for error is very low. So to that extent, valuations are expensive. If growth tends to slip for the couple of quarters, then you start to get worried. What we are looking for, so for us, probably one space which is looking interesting where it is cheap enough is the banking and the BFSI space. So in general, that is still got value, I would say. There are things which we find quite attractive. So that's one space we are looking at. The other is the cement space where, a lot of the large caps are trading very expensive. A lot of the small caps which are trading at reasonable valuations. I think there will be a consolidation in the sector. Because of the consolidation, a lot of these small cap, cement companies could start trading at much higher valuation because there's a possibility they get acquired. So there are spaces here which are still attractive. But in general, I would say valuations are not looking very comfortable.
Okay, you mentioned some of the financials and the banks. I have to ask you specifically on the PSU banking space. Is this a pocket where you see opportunities, or do you think that we've seen, enough of a run-up for now?
So I think, in the PSUs per se, most of them we've seen a very sharp run-up. In fact, some of the smaller ones have really done much, much better than what the larger ones have done, and they now trade at valuations which are more expensive than the larger PSU banks. But I think now there are many private banks which are trading cheaper than the public sector banks in terms of just price to book, and that is the area that we are focusing on. These are smaller banks, they are more regional banks, but they also got decent ROE, ROC, and taking advantage of the decent return of credit growth and NPL starting to wane off. So I think, we still are sticking to some of the more private banks. That's where we see, greater value.
Okay. Yes, absolutely. PSU banks have had a phenomenal rally, haven't they? So, Jyoti, as we're in the last 3 months of this calendar year, what is the approach that you're taking to your portfolio now? Have you raised cash levels, or are you still inclined to put in more money to work? And if it's the latter, then which sectors are you looking at?
So we like markets always, whenever the markets are strong, you get money. So we've been getting a lot of money in the last, 2 months. We've been investing very slowly. So for us, it has been, we're investing in a staggered manner, waiting for corrections, waiting for pullbacks. So we generally like to buy on days where there's a lot of blood on the street. Second is, in general, we build cash in our portfolio. So most of our portfolios, we are sitting at close to 10%, between 10 and 15% cash. So, because we think that if there's a chance that at some point the market's correct, we want to have some cash at that time so that we can invest over there. But apart from that, we are obviously investing in things which we like. Like I said, there are some pockets which are looking attractive. They may not be as cheap as they were in March, but then, you can't get the cheapest levels everywhere. So just remember that money will still be made because there's growth. So, I think India will be the fastest growing economy over the next few years. We'll have earnings growth, which will grow 12 to 15%. So, if you can get companies which are reasonably priced, you could get many of them which are growing at, 15% plus. So money will be made because the earnings growth will come. But yeah, you want to be a little cautious and hope that there's a pullback because, a 10% pullback is normal. Like if you look at the last 25 years, there have been only 2 years where we didn't get a 10% correction in the market. So what we're also hoping is, this whole valuation corrects partly due to price correction, partly due to time correction. So we're keeping some money dry for, that sort of correction which comes through.
Fair enough. I think a lot of people have been waiting for that correction. It's just that it's been elusive, right? It's been this breathtaking run. And now a correction is what? Like some 300-400 points in the Nifty. That's all we've got in the last few weeks, right? Can't even classify as a real correction. But anyway, let me ask you, just list out your sectors in terms of, priority. If you could just list out, say, your top 3, where you'd put this money to work as and when that correction comes in, if it comes in.
Yeah, so, one would be the banks and the BFSI space. So that's where, we are quite positive. We are investing money. The other is cement. So these are the 2 sectors I spoke about. The third is pharma. So, in general, our theme has been buy local, avoid global. But pharma is something we are quite positive on. The US generic space, if you see for the last 6 years, they were a big pain because companies, the price was eroding year after year after year. Most companies were seeing a drop in earnings year after year in the US generic space. But that we think has bottomed out. From here, probably earnings will be flat, price erosion will be very mild. And so that's one space that, I would say we would want to buy on every dip because we could see, these things improving over the next 2-3 years. The stocks have done very badly over here. Now, obviously, this is like for most stock specific, then probably what a cement is or what a bank is. But in general, I would say the pharma is another space we are looking at and need to invest.
All right, very interesting. Jyoti, thanks a lot for joining us and taking us through that quick check on the market as well as how you see things really heading from here on. That is Valentis Advisors with their outlook on the market. But with that, it is time for a short break. On the other side,